Okay. From the following trial balance of Shreyas and Mrunal and adjustments, you are required to prepare trading and profit and loss account for the year ended 31st March 19 and a balance sheet as on that date. So you have the trial balance. Remember, the date of preparation of these accounts is 31st March 2019. Okay. Now the trial balance has two columns there, debit and credit. So the work is going to be very easy. In the debit side, okay, the debit balances, there are two items, and that is, one is all the assets, and debit side also has all expenses. And credit again has two items, one is all the liabilities and all incomes. Okay, this should help you identify and differentiate between the items given there. So it will make our work easy. Now remember, final accounts means we are preparing three things: the trading account, profit and loss account, and the balance sheet. So your job is to pick up these items and tell me where those items are going to go. Okay, out of the three statements that we are preparing, where are these items going to go? So let's start with the first item. I'm going to write here. If you have the hard copy of the textbook, you also write it there. Tell me, where will you write capital of the two partners?
Liabilities.
Liability side in the balance sheet. Very good. Continue. Purchases.
Trading account.
Trading account.
Trading account. Sales.
Trading account.
Trading account.
Also trading account. Bills receivable.
Assets.
Assets.
Bills receivable is an asset. Good. Opposite of that, bills payable
Liabilities.
Liabilities.
is a liability. Then commission.
Profit and loss.
Profit and loss.
Profit and loss account. Very good. Salaries.
Profit and
Profit
loss.
and loss.
Profit and
And
loss.
loss account. Good. Now remember how to differentiate between trading account and profit and loss account. One simple rule, if you remember, that anything relating to manufacturing, that is producing your goods, or trading, which is buying and selling, all of those items will come in trading account. But the moment there is any income or expense other than those activities, it will go in profit and loss account. So yes, let's continue. The next is insurance.
Profit and loss account.
Profit and loss account. But do you see there is something given in the bracket? Insurance, they are saying, is only paid for 9 months. Okay. We prepare accounts for a period of 12 months, which means all income and expenses should be recorded for a period of 12 months. Here it is recorded only for 9 months. It is recorded less. Can you tell me the name of this adjustment? Any expenditure paid less means that expenditure is dash.
Outstanding.
Outstanding.
Yes. Put a tick mark on insurance. There is an adjustment of outstanding. When we reach that point, we will make the adjustment. Okay, let's continue. The next item, prepaid rent.
Assets.
Asset.
It is an asset. Any expenditure which is paid in advance, okay, is our asset. The benefit we are going to receive next year, and whenever there is such an item where the benefit is going to be received in the future, okay, then that is classified as an asset. Prepaid rent, you have already paid in advance. It is an asset. Continue. The next item, creditors.
Liability.
Creditors are a liability. Opposite of that, sundry debtors.
Assets.
Assets. Then continue. Postage.
Profit and loss.
Profit and loss account. Freehold premises.
Assets.
Assets.
Premises
Assets.
is your asset. Good. Furniture.
Assets.
Assets.
Asset. What about bad debts?
Profit
Profit
and
and
loss.
loss.
Profit and
Loss
loss.
account. Bad debts is a loss. Losses have to be debited. Profit and loss account. Good. Continue. Cash in hand.
Asset.
Asset. Same with the next item, cash at bank. Also
Asset.
an
Asset.
Now the next two items important. Okay, get this right. Carriage inward, where will you write?
Trading account.
Trading account. And what about carriage outward?
Profit and loss account.
Profit
and
and
loss
loss account. Now those who don't know, pay attention. Carriage inward means bringing goods into your factory. Okay, whatever goods are required for producing, okay, let's say the raw material. For bringing it into the factory, you may have to pay certain amount as transportation, whatever that it is going to be loaded in the truck. and brought to your factory, that expense is known as carriage inward. That is necessary for manufacturing. Without those goods coming into your factory, you cannot produce them. Okay, then if it is relating to manufacturing, it has to go to trading account, which is why carriage inward goes to trading account. But carriage outward is going to profit and loss account. The reason is the manufacturing is already complete. Now it is time to sell your goods. So you're removing the goods from your factory and taking it out. Is manufacturing complete? Answer is yes. So carriage outward has nothing to do with your manufacturing process. Goods are already produced. Okay, now you're only taking them out, which is why such an expense is not going to trading account, but it is going to profit and loss account. Okay, good. Let's continue. The next item, stock on the first date, is known as which stock?
Opening stock, trading account.
Opening stock will go to trading account. Now, returns. And they have only mentioned returns. They have not said which purchase returns or sales return. But if you look in the column, it is there in both in the debit as well as the credit. Now, think carefully and tell me, the debit item is which type of returns? There are both. There is purchase return and there is sales return. You need to get this correct. Returns which are written in the debit.
Sales return.
They are
Sales return.
sales return. That is correct. I will explain in a moment. So automatically, the credit one which is given there, 1,800, those are purchase returns. Now, how did we get this sales return and purchase return? How to identify which one is the correct item? Remember, purchase and sales, you already know which one comes in the debit and which comes in the credit. Purchase is an expenditure. It will come in the debit. And sales is an income. It will come in the credit. Already there on top somewhere. Okay, you have purchase and sales, debit and credit. Returns are exactly opposite, so they should be also in the opposite column. And I told you that purchase and returns and sales and returns are always opposite of each other. They will come in the opposite column, okay, which is why we put a minus sign in the trading account for both those items. So if you see here, purchase return will be in the credit and sales return will be in the debit. Both those items have to be adjusted. So what you do is tick mark both purchases and sales. We are going to have to write it in the inner column and then make the adjustment of the returns. Okay, let's continue. The next item, wages. Where do we write?
Trading account.
Trading account. But what about outstanding wages?
Trading account.
Not trading account.
Liability.
It is a liability. Understand, outstanding wages means wages which have not yet been paid. This amount is going to be paid in the future. Remember, anything that you have already paid is an expense that will go to trading or profit and loss account. But any item, any expenditure which is not yet paid, which means it is to be paid in the future, then such an item is known as a liability. Okay, so the word outstanding helps you know that this item of wages is not yet paid, which means it has to go to the liability side. And there is one more hint which will help you that it is a liability. And remember, wages, when you said trading account, that is correct. It is an expenditure and expenses are to be debited. So you will see it is in the debit column. But outstanding wages has gone to the credit. Okay, so it cannot be an expenditure because expenditures have to be debited. It is coming the credit, which means it has to be a liability, because in the balance sheet, remember, we had a discussion, the liability side is the credit side and the asset side is the debit side. So here it is in the credit that outstanding wages is an item of the liability side. Okay, now we have completed with the trial balance. All these items which you see in the table above are to be posted only once. They are going to have only one effect. But the next part that you see, adjustments, all of these 6 items are going to have 2 effects. You're going to pass the debit effect and the credit effect, and then only that transaction will be complete. So what are those adjustments? Let us see one by one. Closing stock is 30,000. Okay, we will record closing stock. One effect is in the trading account, one effect is in the balance sheet. Next, outstanding expenses. There are 2 more. One was already there in the trial balance. Now there are 2 more. They are saying salary 1,200 and commission 400 are outstanding. That means that expense is not yet paid. We will have to adjust and make it the correct value. So tick mark both those items, outstanding salary and commission. It's there on top. Tick mark commission and salaries. The reason we are putting a tick mark is to know that when we write that item, it has to be written in the inner column because there is a particular adjustment on that. Again, two effects are going to be there, commission and salaries. Then let's move to the next. Third one is depreciate furniture at 10%. Furniture value is going to change. It is going to reduce because of depreciation, that is wear and tear. Okay, because of usage, the value of asset reduces. So tick mark furniture, we will have to change the value. Then next item, provide for further bad debts 1,200. There was already some bad debts in the trial balance, and later we come to know that there is some extra loss. Some more customers did not pay us, and because of that we have a loss, and that loss is called bad debts. So our loss is going to increase. Tick mark bad debts because there is going to be further bad debts, more bad debts. And bad debts means your customer is not going to pay you. Customer in accounts is known as debtor. So also tick mark debtors because whatever balance you see, 25,000, that amount we are not going to receive. There is some loss. We will have to remove that item from debtors. Tick mark debtors and tick mark bad debts. Then point number 5. Okay, this is the new point, important. Okay, goods of rupees 5,000 are destroyed by fire and insurance company admitted a claim of 2,000 only. When you have produced your goods, okay, they were kept in the warehouse, but in the warehouse there was a fire and some of the goods that you had made are completely destroyed by fire. And what happened? You estimated that loss is 5,000 rupees, but luckily you had some insurance on that. So the insurance company said that you have a loss of 5,000, no problem. We are going to return some of that money to you, and they have returned 2,000 rupees to us. Our actual loss was 5,000, but 2,000 has been returned by the insurance company. So actually, can you tell me how much is our real loss?
3,000.
1,000.
Only 3,000 rupees. We did not suffer the full loss of 5,000 because insurance company has returned us 2,000 rupees. So how do you account for that? Remember, now you are going to write in 3 places because one is the goods destroyed, one is the amount being given to you by the insurance company, and one is to record the real loss, which is only 3,000 rupees. When we reach that stage, again we will have a detailed discussion on where to write, in which place to write these 3 figures, 5,000, 3,000 and 2,000. All of these have to be recorded, but detailed explanation once we reach that point. Okay. Then the last point is not an adjustment, only information that the 2 partners, Shreyas and Mrunal, are sharing profits and losses in the ratio of 2:1. Very important, because when we calculate whether profit or loss, and it has to be distributed to the 2 partners, we are going to use the ratio of 2:1 and give them their respective share of profit or loss. Okay. Now that we have had a discussion and we have also put a tick mark on all those items which have to be adjusted, now it is time to prepare our solution starting from the top. The first thing that we are going to do is write the date. 31st March 2019 is the date we are preparing the accounts. So on top of both the trading P&L and the balance sheet, let's write down the date. First, write down trading and profit and loss account for the year ended 31st March 2019. Then next, over the balance sheet also, write down balance sheet as on 31st March 2019. Capitals. On the liability side, we know there are 2 partners. First one, write down Shreyas. And always below capital, I told you leave about 3 to 4 lines because there could be some adjustment. So 1, 2, and 3. And then write the next partner, Mrunal. And again, leave 3 lines. Just put a dot so that you remember you have to leave those lines there. Okay. Now the order of solving is important. What you will do is next take the trial balance and take each item in the same order that it is given there. So let's begin now. The first thing is capital account of the two partners, Shreyas and Mrunal. Pick up those figures and write it against their name. For Shreyas, capital is 35,000. Inner column always. Next to Shreyas, write down 35,000. And for the next partner, Mrunal, capital is 20,000. The next item is purchases that will come in trading account. We have already written the word purchases, but remember it has a tick mark. So write in the inner column 37,800. And below that, there are going to be some returns, which I will write and keep. You can write the full word purchase returns or just write less returns. Both are allowed. Then the next is sales on the credit side of trading account. Again, inner column, write down 66,700 and write down below that less sales returns or only returns and leave a line for that. Continue. The next is bills receivable. That is an asset. So come to the balance sheet asset side, first item, write down bills receivable. Amount is 8,000. Then opposite of that, bills payable, that is a liability. So come to the liability side in the balance sheet. And after Mrunal, you have left 3 lines, then write bills payable 6,500. Continue. The next is commission. That goes to profit and loss account. So below the trading account, the total line right there, it is an expense. So debit side to commission. It has a tick mark. So write in the inner column. Commission is 2,400 and leave a line below that. Adjustments, remember, when we reach that stage, then only do the adjustment, not before that. So which is why we leave a line and continue. Don't break the order. The next is salaries. Also profit and loss account, continue to salaries. This also has an adjustment. So inner column, write down 6,000. Leave a line. So actually, if you have a look, okay, once the discussion is complete, what you are actually doing is only picking up from the question and copying it in the correct place. So let's continue. After salaries is insurance, another expenditure. And the bracket says 9 months, which means there is an adjustment on that. So write down insurance in the inner column. Amount is 9,000. Now this adjustment we can complete right away because there is no separate mention in the adjustments below. So let's finish off this adjustment about insurance. It is said it is only for a period of 9 months. But we need to record for a period of 12 months. Then how do we adjust that? Now pay attention. I will show you the calculation here. You can take it down in the rough. 9,000, okay, they are saying is paid for a period of 9 months. But we are recording incomes and expenses for a period of 12 months. For a period of 12 months, how much should be the expenditure? To find out, what you do is cross multiply. What is given to you is for 9 months. We are required to find out for a period of 12 months. cross multiply and tell me for the full year how much should be insurance.
12,000.
12,000.
It should be 12,000 rupees. Cross multiply 9,000 into 12 divided by 9 will give you 12,000 rupees. So remember, if insurance has to be 12,000 rupees for the full year, in your outer column the expenditure should be 12,000. But insurance is only 9,000. You have paid less, which means some amount is still payable, some amount is still outstanding, and we will have to add that amount to make it correct amount of 12,000. So write down plus outstanding, and that is 3,000 rupees. If we add 3,000, then we get the correct amount of 12,000. So add 3,000 there. Okay. Now there is one more effect to be done. One is over here. Okay. Insurance outstanding, and any expenditure which is outstanding is a liability. Okay. So you have to go and write it on the balance sheet liability side, only the part which is outstanding, that is 3,000 rupees. So let's go to the liability side. Second effect, remember any adjustment that you do will always have two effects. So write down here outstanding. You write outstanding expenses, because if you have a look down, there are some more expenses which are outstanding. So we will all write them together. Outstanding expenses, out of that the first one is insurance. We have calculated that amount is 3,000 rupees. And two effects are complete. Adjustment relating to insurance is complete. Now we have recorded for an entire period of 12 months. We have adjusted and written the correct amount of expenditure. Okay. Let's continue then in the trial balance. The next item is prepaid rent. This is exactly opposite. Any expenditure which is already paid in advance is your asset. So come to the asset side and write down prepaid rent. Amount is 3,000. These two adjustments, okay, prepaid and outstanding, are the most common in final accounts. Of course, this item, since it is given in the trial balance, okay, prepaid rent, it will have only one effect. This is not an adjustment. When it is already given to you in the trial balance, it will only have one effect. Let's continue. After prepaid rent, the next is Sundry Creditors. That is a liability. Below outstanding expense, what you do is leave two lines, because there are two more expenses which are outstanding. Okay, commission and salaries, which we read in the adjustment. So leave two lines and then write creditors directly in the outer column. Amount is 48,900. Then opposite of that, next is sundry debtors, which is an asset. So come to the asset side, write down debtors. And debtors, remember, as a tick mark. So write in the inner column, amount is 25,000. There is an adjustment of bad debts. Leave one line for recording that adjustment. Okay, let's continue further. The next item is postage. That is an expenditure. Will go to profit and loss account. Right on to postage. Amount in the outer column, 1,700. Then next is freehold premises. Premises is an asset. Back to the balance sheet. Asset side, write down freehold premises. Amount is 17,300. Even the next item, furniture, also an asset. Continue on the asset side. Furniture. But this item has an adjustment, so write in the inner column. Amount is 20,000. Leave one line. There is an adjustment of depreciation there. Okay, then next is bad debts. That is a loss. Come to profit and loss account. Inner column, remember, because there are some more bad debts later. So these ones write in the inner column. 2 bad debts. Amount is 500. Leave one line and continue. The next is cash in hand and cash at bank. Both are assets. Balance sheet asset side, one below the other. Write down cash in hand. Amount is 4,500. Below that, cash at bank. $16,000. Then next, carriage inward. That is an expenditure. This time it will come to trading account. Goods coming into the factory to carriage inward. Write down the amount, 800. Then next is carriage outward. That will go to profit and loss account. To carriage outward. Amount is 1,700. Next, stock, which is mentioned on the first date, that is opening stock in trading account. The first item we have already written the word to opening stock, outer column, write down 22,500. Then returns, both are there. In the debit, what you see 1,200 are sales returns. So take that item. Below sales, we have written less returns. Write down 1,200. Deduct and tell me the correct amount of sales.
65,500.
Yes, 65,500. Same thing we'll do for purchases. The one that is given the credit are purchase returns. So below purchases, write down less returns, 1,800. Deduct and tell me the net purchases.
36,000.
36,000. Good. Returns have been recorded. The next item, wages. Also part of trading account. Write down 2 wages. Directly outer column, 3,100. Outstanding wages are there, but that is a liability. We have written the word outstanding expenses. The next you write down there, wages. Amount is 1,600. Okay. At this point, the trial balance is complete. Now we move on to the adjustments. One by one, we will take that. But remember, there are going to be two effects for all of these adjustments. The first one talks about closing stock. The first effect is going to be in the trading account. The way we have written opening stock on the debit, closing stock is the last item in the trading account, but on the credit side, opposite side, leave about 2-3 lines below sales and then write down by closing stock. Amount is 30,000. This is one effect. And closing stock, this year whatever stock you have already produced and kept could not be sold, will be sold next year. You will receive money next year. So whatever money is going to be received next year is your asset. So closing stock, second effect will be on the asset side. Write down closing stock, amount is 30,000. Adjustments means all those figures, okay, which were not put earlier into your accounts. Now you have to write them. So which means they have to have the two effects, debit and credit. Writing on the asset side, that is your debit effect. And we have written closing stock, trading credit. So both are done. This adjustment is complete. Then we move on to the next. You have outstanding expenses, salary and commission. First, let's go to that expense. Come to salary. In profit and loss account, we have written it in the inner column because that is incorrect. You have not paid for a full period of 12 months. There is some amount which is not paid. Add and write the correct amount. Write down plus outstanding. And they have calculated and given to us this outstanding salary is 1,200. So add and tell me the correct amount of salary for the full year is how much?
7,200.
7,200. Same thing also for commission. Okay, let's add there also plus outstanding. And commission outstanding is 400. Add up and total commission is
2,800.
That's right, 2,800 in the outer column. If it is paid less, if that expense is outstanding, then add it to that expense and write the correct value, the total expenditure for the full year. Now, you have recorded the expenditure, but that amount is not yet paid. It is outstanding, which means it is to be paid in the future, payable. Such an item is called a liability. So let's go to the liability side and record both of these, salaries and commission outstanding. Remember, we have already given the heading outstanding expense. Below write down salary. That was 1,200. And we had commission. That is 400. Okay, 4 types of outstanding expense: insurance, wages, salaries, and commission. Now add up and find out the total outstanding expenses. All of these 4 items add up and tell me the total.
7,200.
7,200. Please check everyone.
Yes, sir.
Yes, sir.
Okay.
I think it's 6,200.
6,200.
It is 6,200. Just check everyone. It's not 7. It's 6,200. That's correct. Three, 4, 5,800 and 400. 6,200 is correct. Okay. That is our total outstanding expenses. Adjustment relating outstanding is done. Let's move on to the next point. Number 3 talks about depreciation. Depreciation means fall in the value of your asset. Asset value is reducing. So let's change the value of the asset. Reducing means deduct from that asset. Less depreciation. Okay, they have given us a percentage, so we will have to calculate. Rate is 10%. So amount of furniture is 20,000. Rate of depreciation is 10%. Multiply 10 upon 100. And tell me how much will be depreciation?
2,000.
10% means 10 less.
2,000.
Amount is 2,000. Deduct, and how much is the furniture value now?
18,000.
18,000. So if you have a look, furniture value has reduced. From 20, it has become 18. And that reduction, 2,000, which is depreciation, is our loss, which has to be debited to profit and loss account. Losses are to be debited. So second effect, after reducing it from here, come to profit and loss account debit side and write down to depreciation on furniture. That was 2,000. Okay, then we move on to the next. Point number 4, provide for further bad debts 1,200. Bad debts means your customer is not paying you money. Your debtor is not going to pay you money. So whatever you have recorded, debtors supposed to pay you 25,000. Now they are not going to pay 25,000. Some amount is going to be reduced because they are not going to pay, and that is because of bad debts. So below that, write down less bad debts. And that amount is 1,200. So subtract from 25, 1,200. Tell me how much is the correct value of debtors now?
23,800.
That's correct. 23,800. Good. This is one effect, and bad debts is our loss. So that also has to go to profit and loss account. Debit side, we have already written once bad debts. Go to that bad debts and again add over there. Write down plus new bad debts. We had written it in the inner column for this reason only. There are some more. Call them new bad debts. That was 1,200. So total bad debts for this year, 500 plus 1,200, that is 1,700.
700.
Outer column, 1,700. Done. Two effects are complete. This adjustment is over. Now we move on to the very important adjustment in this question, and that is relating to some goods which are destroyed, and insurance company has given us some amount as refund for that loss. Okay. Now pay attention. When goods are going out from your factory, okay, whether it is for selling purpose or it is going to the owner as drawings, okay, or it is going out as free samples for advertisement, or it is getting destroyed, all of these items are going out in some form of the other. The moment we say goods are going out, remember it will come in trading account on the credit side. Credit what goes out, you can use that rule. Goods, okay, or stock is your asset. The moment it is going out, credit what goes out. So sales, goods have gone out, we have written on the credit side. Now goods are going out because they are being destroyed in the fire. Okay, then those goods are no longer going to be available with you. So credit trading account. Write down one effect is going to be on the credit side by goods destroyed by fire. And the total amount of goods destroyed by fire is 5,000. So those goods are gone out. Full 5,000 is gone out. So you write down 5,000. These are the value of goods that have been destroyed. This is one effect. Then, second, when you read the sentence, they are saying the insurance company has admitted a claim of 2,000 only. The meaning of admitted a claim, understand, is that the insurance company said that, yes, You told us that goods have been destroyed of 5,000. No problem. We will give you 2,000 rupees. They have admitted a claim, means they have only said that we will pay you 2,000. They have not yet paid us. They are going to pay us. They will pay us in the future, which means we are going to receive that 2,000 in the future. Can you tell me an item which is to be received in the future will be written where?
Assets.
It will be written on the asset side. Very good. Our assets are those figures, all of which those amounts are going to be received sometime in the future. So even that amount of insurance which is going to be received in the future is an asset. Write down on the asset side, insurance claim. Insurance claim. Remember, not full 5,000. They said we will give you only 2,000. So record 2,000 rupees. That is the amount that we will receive from the insurance company in the future. Okay. But our transaction is not complete. 5,000 worth of goods have been destroyed. In future, we are going to receive 2,000. We have suffered a loss in the middle. Our loss is 3,000 rupees. And losses, remember, have to be debited. Losses as per nominal account have to be debited somewhere. And that place is in profit and loss account. So that third item, that 3,000 loss which we had discussed, is an item that will go to profit and loss account debit side, and the name will be written as 2 loss by fire. Right now, 2 loss by fire. That amount is 3,000 rupees. For understanding, if you want, write in the bracket. Total goods lost was 5,000, but the insurance company has returned us or going to return us in the future 2,000. So our actual loss is only 3,000 rupees, which is called loss by fire. So remember, now have a look, take a moment and see how you have recorded this transaction. In 3 places you have recorded. Okay. 1, goods are going out worth 5,000. So trading account credit side 5,000. Next sentence says insurance company is going to pay you 2,000. In the future, you will receive 2,000. That is an asset. Insurance claim 2,000. And 1 more place, loss. Okay. 3,000, which we are never going to recover. That is our loss, which will be debited to profit and loss account, because losses as per nominal account rule have to be debited. 3 places we have recorded. Now this transaction is complete. Okay. Now if you want to check, okay, just pay attention, don't write anything. If you want to check, have we done both the debit and credit effect, and that too with equal amount? Answer is yes, pay attention. Writing in the credit side of trading account, you have done the credit effect. How much? You have written 5,000 in the credit. Okay, done. What about the debit side? Have you recorded 5,000? Answer is yes. Debit side, 2 times you have recorded. One on the asset side, you have recorded 2,000 rupees. Asset side is also debit side in the balance sheet. And one effect in the debit side of P&L account, you have recorded 3,000 rupees. So totally, you have recorded 5,000 on the debit and 5,000 on the credit, and which is why our transaction is complete. Okay. Debit and credit should be of the same amount. And we have done that. Only thing is we have written it in 3 different places, because that is the new type of transaction that you have studied today. That goods going out, some amount being received, and some amount is your permanent loss, which you will never recover. Mark this adjustment as important. This was insurance claim. One aspect was there in this transaction. Okay. That's it. All adjustments are complete. Point number 6 only talks about the profit sharing ratio, which will be recorded, okay, for the purpose of distributing the profits in the end. Since the transactions are now complete, now we have to start closing our accounts for the year. And that is by closing first the trading account to find out what is the gross profit. add up and tell me what is the credit side total. That will always be the greater side in trading account, credit side. Add up carefully and find out the total.
1,05,500.
1,05,500.
1,05,500. Okay. Everybody do your own calculation and compare whether you're getting the same result. Credit side total is 1,05,500. The same should be written on the debit side, 1,05,500. These workings you do in the rough. 1,05,500 is credit side total. You also need to find out the debit side total. That is smaller. So add up those four figures and tell me how much is debit side total.
62,400.
62,400. Okay. Which means debit side is less. You need to put a figure there to make it equal. And that figure is called gross profit. To find out that amount, you take the difference, credit side minus the debit side total. You will know what is that gross profit. Yes, deduct.
38,100.
38,100. Is that correct?
Yes, sir.
Write down 38,100. This is how you close the trading account. Take the greater side total and write it on both sides of the account. And then whichever side is smaller, you are going to have to put a figure there to make it equal. In this case, that is called gross profit, which was on the debit side. 38,100. Then that gross profit is carried down to the profit and loss account. So in profit and loss account, you write down by gross profit brought down. That same figure 38,100 will be recorded here. Trading account information is complete. Now to close profit and loss account, repeat the process. Credit side has only one item, 38,100. Debit side has many items. Add up and check which side is greater.
Credit side.
Credit side is greater. Okay. Credit side, since there is only one item, that is 38,100. You take the total there. Leave about 3 lines, okay, 3 to 4 lines, and then always take the total there. The credit side you said is greater, so I'm going to write 38,100 on both sides. Now what you do is add up the debit side, all of those figures, and tell me what is the debit side total.
32,100.
32,100. Yes,
Yes, sir.
check everyone. Is it 32,100?
Yes, sir.
Yes, sir.
Okay, which means debit side is less. You are going to deduct, and whatever is that amount will be called now net profit. Since
6,000.
the difference is on the debit side, call it net profit. But first, in the rough, find out what is the total net profit. How much is that?
6,000.
6,000.
6,000.
But 6,000, remember, belongs to two people. Okay, Shreyas and Mrunal. So this 6,000 has to be distributed and given to the two people. So net profit, write down below that Shreyas and Mrunal. And now we need to find out how much is the profit belonging to both these partners. So what you will do is take that 6,000 and divide it for the two partners in their profit sharing ratio given in the last line. 2:1. So 2 parts for Shreyas, 1 part for Mrunal. Totally the profit has to be divided by 3 parts. 6,000 divided by 3. How much is that?
2,000.
2,000. That's correct. 6,000 divided by 3 is 2,000. Okay. And then multiply. 2,000 into 2 is 4,000. And 2,000 into 1 is 2,000. This is how you have the total profit of 6,000. 4,000 for Shreyas and 2,000 for Mrunal. Total 6,000 in the outer column. In partnership final accounts, this is how you record net profit or net loss. Always show individually for the two partners. Done. We have distributed the profit here. And because there is a profit, that means the owner's wealth is increasing. Owner's wealth is capital. So in the balance sheet, you are going to add this net profit. Their money in the business has increased because of profit. So once you have recorded here in profit and loss account, this 4,000 and 2,000, let's add it under capital. We have left some lines there. So right below that. First for Shreyas, right on, plus net profit. Amount is 4,000. Same from Runal, plus net profit. Amount is 2,000. Add up and you will know what is the total capital of both the partners. It is increasing. So add up and tell me for Shreyas, how much is the new capital now at the end?
39,000.
39,000, that's right. What about Mrunal?
22,000.
22,000. That's it. All items have been recorded. Okay. Now to check whether you have correctly prepared the entire solution, your balance sheet, the last statement, should tally on its own, which means there's going to be no balance. Both sides, liabilities and assets, are going to be equal. So add up and check whether both sides are equal. One at a time. First, add up and check the liability side. Then to confirm, take the asset side total.
It's 1,22,600.
Did you check both sides?
Yes, sir.
1,22,600 is the total on both sides. Add up and check, are you getting the same result?
Yes, sir.
Good. I will just show you the entire solution now. Have a look. Trading profit and loss account and the balance sheet. Now your solution is complete.